Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 27th of May, 2023, and this is the weekly technical analysis for spot gold and dollar yen for the 5th week of May. And if we look across these two negative correlated or inversely correlated pairs, spot gold has been attempting to hold off any bearish moves, but it finally gave out and fell through after breaking 1975 last week, and it finally broke through the 1950 level on Thursday and attempted to recover on Friday, but could not close back above the 1950. Well, likewise, the dollar was really boosting all the dollar-related pairs from the DXY US dollar index, which we'll see later on. And dollar yen has broken out higher as well, continued its relentless climb after breaking out from and a few ascending triangles here, from the bigger one to the smaller ones, and it's been climbing up for the last 3 weeks. So let's see what drove for these moves for last week, and also take a look ahead for what's coming up this coming week. So last week, the main story is that the US economy is still very resilient, and doesn't seem that the recession is coming up soon, and inflation is still fairly high, which is a cause for concern. So with a fairly strong economy, and which will contribute to higher inflation, then this would be a cause for concern for the Federal Reserve, and they may need to increase rate one more time in next meeting in the next month, June 14. So that is a worry for all the markets, and the major pairs have sold off as a result, including spot gold. So flash PMIs to start with at the beginning of the week, and the key news is the services, 55% versus 52, much stronger than expected. So the US flash services PMIs is always the main driver in the economy, even though the manufacturing came in slightly lower than the 50 mark. And then, as well as on Thursday, the preliminary GDP figure was stronger than expected. It was higher than expected with 1.3%. And then followed on Friday with the PCE price index showing no signs of abating yet, still hovering between 0.3%, 0.4% increase month over month. And this is going to be a key indicator for the Federal Reserve to act on tightening their monetary policy further. Later on, the durable goods orders also higher than expected versus a negative forecast. So overall, the US indicators are all flashing positive, and that's why the US dollar has been pushing up for the 3rd week now in a row now. Another cause for concern for the UK, where the CPI came out much higher than expected, 8.7 versus 8.2. So this will be further fuel for the Bank of England to increase rates, and at the moment it's at 4.5%. This could trigger further increase in the next meeting, June 22nd, to perhaps continue for a couple more months of rate increases to try to push it up to 5% as well. So it's we'll see a couple more weeks down the road. So coming up next week, we have more CPI figures from the other economies, from Australia and the Eurozone. And then, of course, the non-farm payroll report on Friday, where they are forecasting conservative 189,000 versus the actual the previous month of 253, and it has been fairly strong for the last few months, staying above 200,000, and so this would be a bit conservative, and could still beat this forecast. Unemployment rate, they did forecast slightly higher. So we'll see whether this will be another key indicator for the Fed's upcoming meeting. Monday is Fed will be very quiet. Of course, there's holidays all around the major economies from the Eurozone, UK, and the US for Memorial Day holiday. So markets will be quiet and closed as well. At least for the stock market is closed. But for Forex market, it will be low liquidity. And consumer confidence figures on Tuesday, we'll see whether it's going to beat this lower forecast as well. Okay, so major news will be the NFP, and then for the other economies, CPI estimates. All right, let's move on to the analysis. All right, let's start with the spot gold, and that was a critical break of the 1950 level, which has been it did test the previous week, but has been resilient, and it's been consolidating just above 1950 and back up above the 1975 area for most of the previous week, and then finally gave way on the Thursday with the preliminary GDP figure, which came out stronger than expected, and will be a cause for concern for the other major currencies as the Fed will ponder their next potential rate hike next month in 14th of June. So fell through on Thursday, and the PCE price index data didn't help as well, as it was also higher than expected. Although it did attempt to recover and climb back up, but damage was done on Thursday already and just consolidated for yesterday. Now it's attempting to get to this next support zone. Let's extend this out. And indeed, it did hit the zone. It's a swing high. So it did find support, and this let's move this out of the way now, and potentially 62 fib will be the next key support zone at 1912, just below 1913. 2000 is going to be a key resistance, and now 1975 is going to be the next interim resistance here as we extend this part over. So let's move 2000 down, and this. Let's remove that for now. That's very safe. And below that is the critical 1900 psychological level. All right, so we'll see next week. There's a possible recovery. It could try to, it has to break above, back above the daily 55 EMA. Otherwise, and then break above 1975. Otherwise, it's going to have a tough time trying to break out and recover. Otherwise, it may continue to drop and test the 62 fib and 1913. And if it's really weak, and it could just spike through to hit the 1900 level. And that's going to be a critical support where likely a lot of buyers will be anticipating strong demand position here. Right, and this week there's the only major news is on Friday with the non-farm payroll report. And on the weekly time frame, you can see how bearish the last couple of weeks has been. This was a follow through from the previous week where it was quite already tested the 1950 from all the way up from the 2022. So we'll see if there's any further bearish momentum to drive it down to the 62 fib. And that's a very critical level to find some support, and especially just above the 1900. So we'll see how this compares with US dollar index to see whether the US dollar has further bullish momentum, and that could drive the spot gold lower as well. So for now, critical zone that is sitting on just at the 1935 area. So there's still quite a bit of room for it to drop, but it needs to try to recover. We'll see whether this inverted hammer is a possible support candlestick and able to drive it up higher, but could be limited. All right, so let's compare this with the US dollar index and the DXY. All right, let's take a look at the US dollar index. And right from the start of the week, it has been recovering and climbing all the way back up to test the 104 level now before pausing yesterday, and finally breaking through the daily 200 EMA and the 62 fib retracement. There could be some more bullish momentum to break above the 104, and if it does, then it may target the 786 retracement at 104.40, and that aligns with this area here at a swing high. So we'll see whether there's a continuation move next week. On a weekly time frame, that's another bullish move. It's 3 consecutive weeks, just like the euro falling for the past 3 weeks. So since breaking out of this ascending triangle, it has been forming and consolidating for 2 to 3 weeks. Yeah, for 3 weeks before breaking out. And this interim resistance at the previous swing high, tested twice before the swing highs, and that's a key resistance that is broken through. So at this level, so let's see this coming week whether it's able, this breakout from the daily 200 is able to hold and then continue to move up to test the 786 before consolidating, perhaps consolidate around the 104. So from the 103, probably 40 level. Yes, that's the 103.40 level. And perhaps try to target the 104.40 level. So let's see if this support can hold. And let's move this into this zone for support. Move this one up to the 103 and the 50-pip retracement for key support now, just below 103. And we'll move for the next one up here at the daily 55 and the 38-pip retracement. So above this, let's also add the next key resistance. Okay, let's move this away. All right. So only one major news next Friday, non-farm payroll report, and see if there's any follow through in the bullish momentum after 3 weeks of a bullish move already. Could be another half week of a move just to hit the 786 before some consolidation. So we'll see what happens next week then. All right, let's move back to the other major pairs. All right, let's move on to the dollar against Japanese yen, where it has been on a bullish charge after breaking through the key 138 level. And it has pushed through the 140 on Friday, yesterday, climbing past the 162-pip extension of this smaller reversal. And now likely targeting the 141, just above 141. And this is the bigger swing, pip retracement, pip reversal move. So it's definitely going to, it has already hit a high for last week of 140.72, so it's already very close to hitting this 141 target, just above that. And beyond that, if this is bigger ascending triangle here. So this move here, or this distance here, if we extend it out, it's way up higher to 146 level. So sure it's going to get there that soon, but watch out for next month. Meanwhile, on the shorter time frame, well, on the smaller fib, if you use this distance here, then the 200 fib is just above 142.05. So that's within reach next week if the bullish momentum continues. All right, so let's mark some key zones here. We do have this 142 level, 200 fib extension. Let's add the 142 figure. It's already approaching 141 at the 138 fib extension, and let's move this and identify that as a interim resistance. This area below here at the just below 138 is going to be our interim support. And there is a confluence of support here at the 62 fib, along with this 786 for this bigger swing. So that aligns together. And that's at the 136.14. So that will be a major support level as the daily 55 is coming up as well. So since the pause on the Tuesday and then the Wednesday onwards, it has been pushing up higher. So let's see if any of these US news will cause any reason for the dollar yen to pause. Otherwise, it's going to continue to push up higher. So it's 141 and then 142. So watch out for the yen and the yen pairs. On the weekly time frame, you'll see this is a very strong bullish move since that hammer bounced off the trend line 2 weeks ago, and for the last 2 weeks it has been roaring higher. Okay. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.